Holy moly, guys. This is not looking good at all for BJ's Wholesale Club. Their stock is down around 8% right now, down to about 64 bucks per share at a fresh low here on the 4-hour time frame after this company reported earnings this morning. So you guessed it, we're going to break down the earnings in this video. We're going to go over the charts and talk about what I'm looking to do with this company. Am I buying the stock? Am I selling the stock? So if you find value, all I ask is to hit that like button and to subscribe. And if you want some free money, hey, who doesn't like free money? Get up to 15 stocks from Moomoo, each up to 2,000 bucks, and 12 stocks from Webull with any amount deposited. All those stocks are linked down below or on the side here, wherever the heck the links are. Go click those links, get your stocks. So with that being said, guys, cheers, let's talk. So again, BJ's ended up reporting earnings this morning, and their stock is freaking collapsing, down 8.5% now, getting closer to that 10% in the red mark, guys, which is not good. And again, like I said a second ago, it just hit a fresh low on the 4-hour chart, and now it's down officially almost $20 from where it was back in the middle of November. In other words, percentage-wise, it is down around 23%. So now with this move down for BJ's, it is in a bear market officially, and I'm not sure exactly what the all-time high is on this stock. 80 bucks. Yeah, 80 bucks is the all-time high, which I guess that is from back in whenever the heck that was. Either way, it's officially in a bear market right now after the company reported earnings this morning, and the earnings were not that good. So they did EPS of 85 cents, which came in line with the estimates, all right, but sales ended up missing, $4.72 billion versus $4.80 billion expected. And when it comes down to comparable club sales for Q1, they grew around 2% year over year, not too bad. And let me see here, same store sales rose 5.7% for the year, which came in under the 6.1% expected. So they're still growing, or rather increasing when it comes to same store sales, but again, not as much as the expected estimate, or as much as the estimate, which is not good. Of course, you want to see those numbers come in line with the estimate, or even it's even better if they beat the estimate. Looks like here they reaffirmed their outlook, revenue increase, earnings slip, yada yada yada. So let's see a little bit more in depth here on the actual earnings release. What are some key financial highlights? Let me actually dive into this, guys, and this is a very important company because it goes to show kind of how the consumer's reacting right now. And of course, Costco is the big competitor. And let me actually see what Costco stock is doing right now, guys. Forgot to take a look at that. Let me see this. Then we'll dive into the earnings release. And okay, Costco's down 1.3%. So it's taken a little bit of a beating, as this company is projected to report earnings on Thursday, I believe in the morning, or Thursday. Thursday after the bell, actually. Not in the morning, after the bell. On the 25th is when Costco is reporting. So let me actually get back over here to this the Safari tab so we can break down some of the key financial highlights. Then we'll take a look at the chart for BJ's a little bit more in depth. So coming down here a little bit, let's see. We have a couple highlights that I want to go over. So some of these we already mentioned, like the comparable club sales, excluding gasoline sales, that increased by 5.7%. That's not bad, but what they don't tell you here is that it came in under the 6.1% expected, like I said a minute ago. And digitally enabled comparable sales growth was 19% year over year, not bad. And membership fee income increased by 6.1% year over year to $102.5 million. Let's see what else. Looks like here merchandise gross margin rate increased 100 basis points year over year, not bad. And earnings per diluted share and adjusted earnings per diluted share came in at 85 cents. All right, and income from continuing operations increased by 3.1% year over year to a good old $116 million. Oops, you guys can see right here if it wants to work. There we go, $116 million. And adjusted EBITDA increased by 16.4% year over year to $257 million. And we can see the company opened 2 new clubs. I'm not sure exactly where those clubs are, but they did open 2 new ones and 3 new gas stations, which you guys know, I mean, gas at BJ's or Costco typically is a little bit cheaper than other gas stations, but then you have to ask yourself, is it worth waiting in the line? Because it seems like there's always a line. I'm a Costco guy, guys, and whenever I go to Costco, the line is out the freaking door. I mean, it is technically out the door because the gas station's outside, but you know what I mean? These lines are so freaking long, and I ask myself, is it even worth saving 10 cents a gallon or 15, 20 cents a gallon, whatever it is it even worth wasting that time and waiting in line for 20 minutes? Or should I go pay a little bit more at another gas station, right? That's always the dilemma that I'm, going through in my head. Should I go to Costco, save the money, or go to a different gas station and, save time but spend a little more? Either way, they opened 3 new gas stations and 2 new clubs, and you guys know what I'm talking about when it comes to the gas. Let me know in the comments. Do you wait in that long line at BJ's or Costco, or do you just go to a Lukoil or a BP and you're like, screw it, I'm going to pay a little bit more? Either way, the company, again, opened 2 new clubs and 3 new gas stations, and the company successfully launched its co-branded credit card with Capital One, which you guys are noticing a lot of these different companies out there, whether it's Apple, whether it's now Walmart, I believe they're getting into this space. They're all trying to become, I'm not going to say financial companies, but let's just say they're adding different products to their repertoire here that, they're adding credit cards, they're adding checking, savings accounts, especially when it comes to Apple. With that new savings account, they are trying to get into that space, which it looks like here, BJ's, they've been doing this for a while, but that's interesting to see overall. And according to the CEO, we reported a first quarter in net income and adjusted EBITDA, which is great, and demonstrating the power of our business model and the warehouse club channel, said Bobby Eddy, who again is the president and CEO of BJ's Wholesale Club. And let me come down here a little bit more. There's additional highlights here, which we're not going to get too deep into in this video because, quite frankly, the video would be way too long. It's already getting a little bit stretched, but I want to see quickly what the balance sheet is looking like right now. So total current assets are right around $1.8 billion. We have cash and cash equivalents at $217 million, or actually no, less than that, $23 million in cash, guys. That's it. Wow, that's pretty surprising. $23 million in cash equivalents. We have accounts receivable at $217 million. All right, and of course they have a lot of assets. When it comes to merchandise inventories, we see that's right around $1.5 billion, with prepaid expense and other current assets right around $69 million. So of course, a lot of their assets are in, the buildings, but also in the actual inventory, right? A lot of their current assets are in the inventory, $1.5 billion. And when it comes to current liabilities, they're right around $2.6 billion. That comes down to, or that's broken up into short-term debt. Of course, we have current portion of operating lease liabilities, accounts payable, accrued expenses, and other liabilities. So their current ratio, guys, is not that healthy. It's actually under a 1. Total current assets are a little bit less than total current liabilities. I'd put their current ratio at about a 0.65, 0.7, somewhere in there. So not the healthiest of balance sheets, but overall not the worst either. And of course, a lot of their assets are in, inventory, like a lot of these other, businesses that relate to BJ's are. That's just the way things are, right? So let me come back over here to the ThinkOrSwim tab so we can see what the stock is doing. Again, it is in free fall mode right now. It is down what now? 8-9%. Let me pull the stock chart back up so we can see. And by the way, if you guys have not gone up to 15 stocks yet for Moomoo, it is free money. Use that link down below or go to StasOrFest.com/Moomoo. Once you guys open up an account, you get 1 free share of stock right off the bat. And if you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. And fund your account with at least $1,000, guys, you get 10 more stocks, totaling 15 free stocks. So if you want to help out the channel and you want some sweet old juicy old free money, use that Moomoo link, guys. I appreciate you all as always. Cheers. Now let's take a look at where this stock could find support, where it could bottom out at, which of course we're not showing any signs of it bottoming out yet, but we are at a low on the 4-hour chart and we are very oversold. So if we pop up the yearly chart, you guys are going to see we are now pretty much at the lows from back in December, late December, early January. As we started off the year, we actually broke under that low. We're still technically under that low. We're at $64. That low was at $65. So hopefully if you're a bull out there, which mind you guys, I'm not in this position, I'm not buying or selling right now. Maybe I will at some point as a short-term, maybe relief rally type trade. But if you're a bull and you're in this, you want to see this hold 65 or get back over 65 and consolidate there, because if it fails to break back over 65, we could, very well come back down to the low 60s. Maybe we start going down to the high 50s. You guys can see here on this yearly chart, if we zoom in a little bit during this time period right here, we peaked out at around 62.50, 63 bucks. That was in the beginning of June of last year, and we bottomed out at around $57 by the middle of June of last year. So in my eyes, that could be where this goes next. That could be the next gap to fill on the downside. But again, it's very oversold. 8% in the red. Maybe we do get a little bit of a snapback before we go down to those levels. I don't know. Time will tell, but I'm actually eyeing up a relief rally here on BJ's Wholesale Club, ticker symbol BJ, and we'll see how it goes, guys. So with that being said, I'm going to wrap up the video. Hit that like button. Feel free to subscribe, and don't forget to get up to 15 stocks from Moomoo, each up to $2,000, and 12 more stocks from Webull with any amount deposited. All those details are linked down below, guys. Check out those links. I appreciate you all as always, and with that being said, cheers. I'll catch you guys in the next video.